Hello and welcome to Process Trading, the home of Inflection Point Trade System. It is a S&P E-mini day trading system that runs on TradeStation. It has a number of unique indicators that have been developed with over 20 years of experience is to enhance the trading of both new and advanced traders. Inflection points guides you through the reading of the right edge of the chart so you can clearly see high probability trades. And that's what this video will explain. It addresses the common mistakes, psychology that's made by a lot of, especially new traders that try to trade against the trend or fail to let their profits run or mistime the pullbacks and reversals. It's a common sense approach to that leads to consistent trades and it creates confidence in reading the price action. With inflection points, you trade a specific set of criteria and equally as important, a trade management system, which we'll go over in a separate video that addresses whipsaws and drawdowns. What makes the system unique is that you not only can, but must read the right edge of the chart. It's not just a black box indicator that tells you what to do. Also, there's a nightly recap in the market forecast tab that goes over the day's opportunities and trades, and it shows unequivocal clear trades and readings and opportunities. So let's look at the system. This is the system as it looks on TradeStation. These are the three time frames. I used the 750 tick bar chart, the 1500 tick bar chart, and this is the 30-minute chart. All of the futures, the S&P mini futures, and this has a unique indicator here with color-coded volume bars. You can see here that the magenta bars will, in effect, precede price going up, whereas the white volume bars, you can't see it very large here because it wasn't a very large volume, will often precede price going down. So it prepares you in setting your expectations. But primarily, we're going to go over these indicators right here. And like I say, the indicators are the same. This is your order entry system on TradeStation. It's the matrix, and we'll go over that in that separate video when we address the trade management system. So these are the indicators. They're non-correlated in that they're not based all off the same data. However, they do comprise a system that's totally coordinated. So here's the upper pane with a regression to mean line, just call it the RTM line, and price above it. Then you have an energy indicator, and that just stands for internal energy. Next, you have a turning points indicator, which has a price line to it, but it also has an inflection line. That's very critical in your reading to be able to read this inflection line. And then down here, it just has a VAR indicator, VAR, which just stands for volume and range indicators. So it uses precision across all these three time frames, and when it's identifying trends and reversals, pullbacks, and high probability inflection points. All the indicators have their own video on the Process Trading website. So what we'll do here is just briefly summarize and demonstrate the effectiveness of using them, putting them all together in a sample reading where you can see that the more you read, the better you read them, the better the system gets, and the better you get. Uh, it's a unique system feature of a system rather than just an indicator where actually you're in control and there's no limit to the expertise that you can achieve. So the system itself consists of two oscillators. Uh, that's the VAR oscillator and the turning points oscillator, as well as a histogram right here, and then a regression to the mean line. And then they're populated with alert timing dots. Let me see if I can open this up. That's these dots here, and we will go over that. And also trend signals. So let's take a look at some of the specific indicators. Coupled with the specific trade management techniques, it actually guides you into buying into strength and selling into weakness. This particular indicator was in the upper pane, and it's the regression to the mean line with the timing alerts. And what it does is the regression to the mean line is multicolored, and at certain points it'll turn green, and certain points it'll turn red. And the only trades, if you're trading off of this, and actually you use all the indicators in conjunction, but as you observe, you actually could just trade off of this and be profitable. But you can see it turned green here, so that means that by the system, you're only allowed to take the timing alert dots as trades that are below price. In other words, you couldn't take a trade up here or here or here or here. Because it's green, you can only take a trade that's below. So you could take this trade here, you could take this trade here, you could take this trade here, and you can see the effect of that. It's still green here, so you could take a trade here. And over here it turns red, so you could not take this trade. You couldn't take that trade, but you could take that trade, and you take that trade, and then because it's still red, you could take that trade. So that is one aspect of the indicators. It considers price in relation to the regression to the mean line. You have to consider, is it above or below the line? The color, at the color change, you only want to trade with the trend. So let's look at the next indicator. This is the Intergy indicator, and it just stands for internal energy. And the internal energy shows both the strength and the weakness in price, and it uses amplitude as signal. So the way that the histogram works is if it's green, then the price is strong. But if it turns gray, that means price is getting weak, or sellers are coming in, or buyers are getting weak. But I just call it price is getting weak. And it's also coordinated with these little red and yellow underscores that signify those points as well. And you can see that here it comes down, it gets weak. Now it's starting to get strong again. It goes up. Right here it starts to get weak, comes down. Here it gets strong again, goes up. Right here, it was strong, stayed strong up to here, and now it's showing weakness right here. And in fact, does come down, and the histogram goes below the zero line. So that in brief is how you read that indicator. Now, remember, you want to read all these indicators together, because that's really the consummate power of the system. That if you read the RTM line and the color changes, the timing alerts, the histogram all together, then that has a great effect. Now, this is the VAR oscillator. Let's do that last. here is the turning points oscillator. And the turning points oscillator has an inflection line, and that's this dashed line here. It's between the inflection line, and this is just the price line, basically. You could call it the turning point line, whatever, but this is the inflection line. And together, this oscillator, they're just uncannily accurate. So you can see that here, that when this crosses, and of course this does this in real time, there's no lag in this. When this crosses through the inflection line, that is indicative of a turning point. And we can see the price comes down here. Here's crossing up and price goes up. Here's crossing down and price goes down. Here's crossing above it and price goes up. Here's crossing above it and price goes up. Here's crossing below it and price goes down, and so on and so forth. Now, you always want to read these lines, and of course, there'll be more tutorials on this on the website and everything. But it's an oscillator, so all of these lines mean something. The relationship that we just went over between the price line and the inflection line is very, very significant. The inflection line may be the most significant line of the whole system, but also the relationship to the upper bounds and the lower bounds, and then the midline are exceptionally important as well. And let's go back to this one now. Then on the bottom, you had the VAR, or it just stands for volume and range oscillator. And it oscillates high to low with a midline, but this isn't called a midline. It's called the pullback line, because it's just, uncanny how it goes from the upper bound, and then it can hit the pullback line and it pulls back, or it hit the pullback line here and it pulls back, and it hit the pullback line here and it pulls back. So at these points, when it comes to either the midline on the previous indicator or the pullback line on this indicator, you want to read them all together, and we'll do that right at the end here when I go back to the trade station example. So let me, so that's the system. That's what it looks like here. Remember, you read the price action with the timing alerts, then you have the histogram that is showing the strength and weakness within price. You have the turning points indicator with the inflection line that tells you. So like, for instance, here's a trend kind of going up, and well, let's take this one because it's easy. We see that right here, price, the histogram is showing a weakness. Price was strong and now is starting to show a weakness. Well, that wouldn't be enough for us to take a trade or understand it by itself. But then we look down here at the turning points indicator, and we see that this is coming down through it, which we know is highly accurate. And then we come down here to the volume and range indicator. Now it's cutting through the upper bound. When it hugs the upper bound like this, you don't want to trade against that. You want to trade with it. And that's what these make you do. That's what these make you do. So you can see how it all works together. But when it's coming down like this, then you know that it's changing. Now you can see that it got down to here and it got down the midline, whereas price showed below the lower bound in the turning points indicator. And on any indicator that you would put on there that's an oscillator, this would show an oversold condition. But when we look here, it cannot get below the pullback line. So it's not going to continue down. If it's going to continue down, we'd like to see it go below the pullback line, and you can see, in fact, it does continue down. But when it goes here, you have to use discretion and caution, because this is the pullback line. That, and in fact, that's exactly what it does. So that's what the system looks like altogether. Now, what we can do here is it's the weekend, so this is Saturday, so there's no movement or anything. But let's go ahead and just quickly read the right-hand edge of this chart, which is what you want to do, because you want to know where its price going. Well, this tells you what it did from where it's been, and also where it's going. So we see that prices here, it's trending up. We can see the slope of the RTM line. It's green, so we would have never been able to take any of these dots as trades. We don't have a dot down here, so there's no trade like that available right now with the timing alert. But we do see from the Intergy that it's just starting maybe to get some weakness, and in fact that weakness is starting to show up here, and it's cutting through the inflection line. The price is cutting through the inflection line on the turning points indicator, so, and it's crossing the midline. That's another critical factor. You want to evaluate these all relative to each other and relative to their own indicator position. So this is going, so that shows weakness, that shows a little weakness, this shows weakness, but this in fact is not even close to the pullback line. So that tells you that, the uptrend is still not something that you would want to trade against. And that's how this keeps you trading in the trend and everything. So that, let me pull this back up here. So that when you're trading here, you're trading these points, you're trading with the trend. And now this allows you to, you can call it counter trend trading, but it identifies why you can do that, because that's at the end. Then it gets down here, you're going to have to look to potentially exit. You're going to have to monitor your trade, or if you're not in, you can take that trade to the long side. So that's it. That's the system. Pretty much it's pretty robust. It doesn't leave much out. Yet it's simple. It's intuitive. It's easy to use, and very effective. It can lead to multiple trades, but really all you need is 2 or 3, a couple of good trades a day, and if you use patience, you can easily do that here. So if this all makes sense to you and you want to give it a try, just go to the processtrading.com website, click on the members tab. It's up above here, and you can sign up for a 2-week free trial. So I hope you'll consider joining the group, and I hope all your trades are profitable, and thanks for watching.